I haven't updated you in a while, so let's dive deep into my dividend portfolio. So this year has definitely been some growth. I've been going through some growing pains, and I finally figured out what type of investor I actually wanted to be, and that is an income investor. Income and dividends first, and growth second. So as you can see from my spreadsheet right here, this year was interesting. I started off with some BDCs and some real estate trusts, some REITs. Then I slowly dived into more income focused ETFs. And I'm currently at only 8 positions. I know you see almost 30 positions right here because this is a yearly chart. But I currently have only 8 positions, 8 core positions. If you want to see my current holdings right now as of today, before I make my next update video, you can feel free to click on the link in the description. Blossom is an amazing app worth downloading because it's like Instagram. In my opinion, I think it's like Instagram, but better because it's only for investors. You get to grow a following, you get to share your social medias, you get to share YouTube videos inside of this niche investing community, over 500,000 investors. You get to see exactly what they're investing in, ask questions, and more. So click the link and download Blossom today. So yes, this portfolio started off very, very interesting. I actually did a lot of changing to make this portfolio a little bit more tax friendly. And the goal is to grow my dividend portfolio to pay my living expenses. That is the goal for this account in my taxable account. And as you can see, the month of September was my biggest earning month. As I was putting on a little bit more risk with these high yield covered calls from OT and YMAX, and I ended up selling out of OT a little bit sooner. I think I could have collected 2 more payments out of this. I exited both positions in profit as I got tired of watching the funds erode. So I got out with a little bit of profit, not a whole lot, but enough to help my account grow. As you can see, this month will be probably around 75 bucks, around 75 bucks. And of course, I'll put that money right back into more funds to continue to grow. So I'm currently at around between 70 and I guess almost $90 at the moment, and I won't be reinvesting anything back into my portfolio. So this is actually snowballing on its own for the rest of the year because I am losing my job position at Apple through the temp agency I was working for. I might create a video on that, but I'm going full time. These 4 right here are my 4 horsemen: SPYI, GPIX, Triple QI, and GPIQ. I just did a lot of changes, a lot of growth. I got rid of 90% of these funds right here. They did help my account grow. They did give me returns. At one point, I was actually beating the S&P 500 before I started changing everything up. But I'm solid in these core 8 positions that I'm currently holding, and I think I'm going to stick with these all through 2026. I've gone wide enough, right? So when you're building your portfolio, you definitely want to diversify to where you're going wide. But then at some point, you want to stop going wide and start going deep. So now I'm really just focused on buying more and more shares and building bigger size positions with the core that I have, SCHD, SCHG. You can see my full portfolio on Blossom. Make sure you check that out. But I'm really focused on growing my core 8 positions all through 2026. I'm gonna try not to buy anything new, but I'm satisfied. Track Your Dividends is a very cool free analytic tracker pretty much for all your dividend payments. Definitely worth checking out. And if you click on dashboard, it shows you even more details. And I have a portfolio yield of 9.62. Yield on cost is a little bit higher, which means my dividends are growing. I am making more money versus what I'm investing. And then I have an annual income of around $1,000. We're going to try to hit $1,000 by the end of the year if we can. But we're just steady growing. As you can see, my portfolio beta, which means the volatility My volatility is lower than the S&P 500. S&P 500 usually moves around 1, and I'm at 0.78, which means it's lower volatility than the average market. So, and this is absolutely free. They do have an upgraded version where you can get more data, more insights, more analytics if you want to nerd out. This one and the one over on Blossom is some really good analytics, some really good tools, so that you can actually track your progress. In my opinion, investing is pretty simple because it's more about consistency. I know there's thousands of funds and ETFs and individual stocks that you can choose, but the most important thing about investing is staying consistent. All right, staying consistent, continually putting money in the market. If you can continually put money in the market over a long period of time, you're going to have a huge nest egg of money working for you. And this is how you can slowly take the gas off of your job, because now you have money working for you so that you can work less hard for money. I hope you found this video helpful. Hit that like button, subscribe to the channel if you want to continue seeing my wealth building journey as an investor, as a Forex trader, and as a content creator looking to go full time since I'm losing my job. Feel free to hit that like button and the subscribe button. And if you found this video helpful, stick around for this next one.